Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
New York coffee. We can easily see from the action over September and October last year that the high at 429.5, let's me rephrase that, from February that year continues to cap the longer term rises in this market. And that's since the start of 2025. On the downside, the combination of the key 50% Fibonacci line for the important November 24 to February 25 move at 335.15 plus the bright red neckline, which is currently at 347.05, had eroded the bearish pressure such that prices after changeover in late December last year did not even make it down to test the next supports, and that's the bright green October 23 to date uptrend, which is currently at 316.25, nor the 50% Fibonacci on the May 24 to February 25 move at 310.80, or even the potentially and gradually becoming more important dark blue lower time, currently at 309.05. Now, in all, prices turned higher before testing these, filling in the changeover gap from December last year on the top side. What had been in autumn 2025 a seeming base on top of the gold long moving average, currently at 352.45, well, it is now acting as resistance on a closing basis, along with the dark blue middle time, which is currently at 352.65. That's of the mid-September to late October 2025 bearish shift pitch walk. All these earlier actions higher left us with a number of interesting situations. There's something else I'd like to look at here, and for this I'm indebted to Ray Bradbury for asking me about New York coffee 41 weeks ago. And I went at the time to my longer term charts, the monthly charts, where we can see some possible insights. You see, on the monthly longer term charts, I noticed back then a pattern that had not been immediately obvious to me at the start of 2025, when I earlier reviewed the longer term charts. It is a multi-year, 2012 to 2024, very large reverse head and shoulders bottom with a bright red neckline on my chart, currently at 277.25. The break higher over this neckline reached its primary target on the upside, but there was a secondary, harder to reach, much harder to reach target up in the 433.35 area. What was interesting about this secondary target was that nearby to that a higher level was the next 100% projected Fibonacci line here at 433.75, quite close in the scheme of things. Prices did indeed turn lower up at this key combination of the 100% projected Fibonacci line and the target at 433.35, dropping down through and closing below the important 50% projected Fibonacci line at 347.20 and below the high of May 2011 at 308.90. However, in July and again in August last year, the market started to form a base on top of the bright red neckline, a horn bottom if you will. August 2025, with its monthly key reversal up, raced all the way upwards, and we saw an extension to that move up in September 2025, but not reaching quite as high as we saw back in February last year, before dropping lower and setting up September 2025 as a monthly bearish harami. However, since then, prices have not carried on too much lower. Now, we have congestion between 371.25 and 375.75 on top. I also have a quite steep, especially for a bullish shift pitch hawk, a quite steep October 23 to August 25 bullish shift pitch hawk here. Here we are this month between the middle time above, which is currently at 401.25, and the lower time below, currently at 306.05. I said 8 weeks ago that I don't favour this pattern much, but it is nevertheless still there. Meanwhile, on the downside, well, the real key, will be the bright red neckline below. I should point out one more final feature on this longer term chart, and that's the possibility that we may even now form a very large bullish halfway rotation, or even a possible bearish double top with all the contrary implications both these patterns may have. I will not discuss this last point any further at this time, as it is way too early to isolate which will be which. But in all of this, I ask you, please remember these here on this monthly chart are longer term, in some cases very long term patterns, and I cover them more fully in my long term coffee technical analysis video published 2 weeks ago. London coffee. 35 weeks ago I said of the bearish pressure on this market, and I quote, "They now have the overhang of the market from roughly 5,300 up to this year's high at 58.49 sitting above." End of quote. Now this overhang of bearish pressure and ammunition is important, as it started back then to press down, heightening the breaks lower. The reaction rise seen since early August last year pushed up through some significant resistances. These turned into supports, some very keen ones. Notably, the trio below of the interesting 50% Fibonacci lines for the November 21 to February 25 move at 38.08, which is still support for now. The May 21 to February 25 move at 36.49, which held up the market in late December last year. And the March 2020 to February 25 move at 34.81, which so far has not been tested since early August last year. Then overhead there is the congestion of 61.8% Fibonacci lines at 41.68, 41.87 and 42.90, which turned back into resistances from supports in mid-December 2025. Then there is all the moving averages sitting higher still. So looking today, we have the significant 50% Fibonacci lines at 36.49 and 38.08, plus congestion at 39.32. The 50% Fibonacci line at 38.08, I have some reservations about. Meanwhile, topside, start looking at the 38.2% Fibonacci line of the March 20 to February 25 move at 40.40. This is currently capping prices, but there has not been a determined attempt higher since late December last year. However, I'm not wholly in love with any of these support and resistance levels. The one and only one that still resonates with me is the dark blue February 25 to date downtrend, currently at 43.48. Enough that I drew a parallel bear channel based around it, with a lower bear channel line currently at 35.49 that can be finessed a little lower, currently at 35.17. I haven't highlighted this bear channel as yet, but the more I look at it, the more I'm thinking I really should do that, but maybe next time.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.